Hello, everyone. Today we're going to talk about Madrigal Pharmaceuticals, which is a small mid-cap biotech company trading on the NASDAQ. It has currently a market cap around 4.5 billion, trades around $220 a share as of today's market close, January 30th, 2024. This is a company which we've been following for a while now. We first were introduced to Madrigal Pharmaceuticals after Synta Pharmaceuticals' failure. As due reverse merger, Madrigal Pharmaceuticals was able to go public. And since then, the company has made a lot of progress. It's definitely an uncharted territory. A company that's in our high conviction portfolio. Is definitely one that we feel very confident in potential generating returns. It has already generated returns for us that are quite significant. However, we do believe the company's future has just begun, and we're going to talk about it today. It's a company that we feel that definitely has a lot of potential. So we're just going to go through the company, the investment thesis, the risk associated with this company, and potential strategies that investors may take on the stock. So, our investment thesis, why are we even in Madrigal Pharmaceuticals, or why do we believe in it? First of all, the company has a PDFUA date on March 14th, 2024. If approved, it would be the first FDA-approved therapy for non-alcoholic steatohepatitis, NASH. Just NASH is much easier to say. The company is definitely in uncharted territory, as all the companies that have tried so far in NASH have failed. A couple of years back, NASH was the hot topic, but because of multiple failures in this space, it just seems as interest died down. However, it's a large population. It's a disease that affects a large population. In fact, even according to Vantage Market Research, the NASH market grew to 108.4 billion globally by 2030. In fact, peak sales for the drug Resmetirom has been expected to be to around 2.1 billion by 2028. So this is definitely a drug that has blockbuster potential. In fact, a while back in December in 2022, the company reported positive phase 3 results on NASH for the drug Resmetirom. The entire market was shook as data was supposed to be dead on failure. However, it proved that it was definitely a change in interest in the NASH market as investors finally believe that a potential treatment could come to market. And this is why this company has a first mover advantage for at least 4 years in a large untapped market. Some of the players that are trailing behind it are Viking Therapeutics, symbol VKTX, which that company trades around about 2.5 billion market cap. So it definitely is on MDGL's back. However, MDGL does have room to really significantly make strengthen its position for at least 4 years before any competitor even comes to market. We're going to talk about the risks later on of how the obesity drugs or the GLP drugs from Eli Lilly and Novo Nordisk have impacted MDGL. In fact, when after the results, the company had gone up to almost $320 a share, as investors believed that MDGL would be acquired. However, if we look back in 2023, the stock had dipped all the way up to I believe about $140 a share. We definitely bought more of the company as we believe it was undervalued, and the GLP the whole aura around it, that it would be a one pill cures all treatment, is just not something we believe. We definitely believe that the GLP drugs will have great sales. However, they we do not believe they will prevent MDGL from reaching its potential. In fact, as investors believed MDGL would be acquired, the stock price took it as well took a dive, as well as sentiment began to be bearish in terms of a deal, and no partnership either came out in 2023, which may have left a sour taste in investors. However, we believe the company has continued to significantly move towards launching this drug. There was a change as CEO, which we're going to talk a bit later on. And we still believe that the company is still a M&A target. Just because the company hasn't accepted a deal does not mean that there is no interest in the company or that the company would not be sold. There needs to be both parties in a deal have to come to an agreement, and no deal does not does not mean that the company may not have offers or maybe a negotiation with companies. And as we were talking about the management team, there was a CEO change in the midway through last year. A lot of investors were surprised. However, we believe that it was in the best benefit for investors, as having a CEO and chairman of the board may have placed too much power, and in terms of governance would not be the right approach. So here is the current structure of the board of directors and management. Right away, one thing that definitely pops up that may get your attention is the chairman and director, Julian C. Baker, which is a managing managing partner of the Baker Brothers, which is a well-known biotech asset management company, which specializes in biotech. And the Baker Brothers have definitely carved up a name for themselves and one of the most successful investors in this space. So having them as, in fact, Raymond Chung is definitely part of the Baker Brothers as well. They have 2 seats on the board of directors, and we believe having an independent director, while still the independence may be in question because they are large investors, they're large shareholders of the company, but we still believe that this is in the best interest of investors, as having the co-founder and chairman and CEO at this holding both positions at the same time could lead a conflict of interest. We've seen over the past couple of years, example, Synergy Pharmaceuticals, which is a company that went bankrupt, had a chairman and CEO, and that did not end well. Does not mean that other companies, other chairmans who are also CEOs, doesn't mean that the companies won't succeed, but it is too much of a concentration of power and decision making in one person. Also, Paul Friedman, after the Baker Brothers took a position, they kind of not cleaned house, but set the company up in a way that they could succeed. So Paul Friedman stepped down as CEO, and Bill Sibold was brought in, who has extensive amount of experience launching drugs. He's coming from Sanofi. In fact, also Carol Huntsman was hired as a chief commercial officer. So these are 2 big names that came from large pharma companies who are joining MDGL at a crucial time. Both have immense amount of experience in this space, and we believe, we're confident in not just the Baker Brothers, the board of directors, and also the management team to successfully launch Resmetirom and reach its full potential. So in terms of management, we are confident in them. Now, so as we were talking about earlier of what happened to MDGL over the past of its existence. So since, as you can see, as the development of phase 1 and 2 of Resmetirom, the stock was kind of it was stuck in a kind of a range, as we said previously, there were so many failures in this space that sentiment kind of died down. And you can see right away, around when phase 3 data was made public, the stock jumped over 200% in one day. And at that time, as we were talking and discussing about it, and a lot of investors believed the company would be acquired, but no deal came out of it. And the GLP drugs, which investors believe would kind of take market share away from NASH companies to treat, or potentially these one pills would cure all obesity-related disorders, was kind of overhyped, overplayed. And the stock kind of rebounded from the lows of around $120 a share to about, this chart is a bit dated as when we made this presentation. So MDGL is currently trading around $220 a share. At this time, it was around 213, and you can see the large spikes from the bottom as the biotech sector came alive. And so, yeah, so at this time, the company, as you can see, that jump from the phase 3 data kind of proves how much of a surprise the phase 3 data was, and it really caught the market off guard. So from here at this stage, really what can move the stock price are three things: the approval, once the FDA approval, we believe that could impact the stock. There is a pending phase 2 data from Lilly that are looking at their drug tripeptide that could potentially treat NASH. If that data is positive, that will hurt MDGL and other players. If that data is negative, which we believe is likely, based on the previous data we got of the GLPs trying to treat NASH, specifically the liver. If that data is negative, MDGL will definitely, that is definitely a needle mover. And if not, and if that happens as well, MDGL's takeover interest will once again resume. And we believe that MDGL will definitely be in a place to succeed. And also, it's important to note that the short interest in this company is close to around 20%. And that is significant for a low float company like MDGL. So if that data is negative, the stock will move, or either positive or negative. The data is supposed to be about February. The stock is going to move. Now, here are the largest holders in MDGL. Right off the bat, we definitely like to see managers who invest in companies in high conviction. The usual companies like Vanguard, BlackRock, State Street, they terms include these funds as an institutional mandate, either in mutual funds, ETFs, index funds. So we don't really view them investing in MDGL in terms of high conviction. However, seeing Janus Henderson Group, the Baker Brothers, Avaro Capital Advisors, and John Paulson and Company, four big managers, well-renowned managers. In fact, we know that Paulson and Companies likes to invest in M&A targets. Definitely leads us to, as a retail, if you look at this, you should feel not at ease because anything may happen, but there are these four to see invested in a company like MDGL definitely should provide some confidence in MDGL. Now, we've talked about MDGL and why we believe it could succeed, but we definitely have to look at the investment risks in this company. So, in terms of the FDA rejecting the drug, we find it unlikely. We believe that the drug will be approved. The labeling might be in question. There are biopsy concerns that can impact the company, but we believe that is the company, the drug should be approved. In terms of Eli Lilly's tirzepatide data, now that is a big looming factor. As we said, the data should be out in the month of February. And if it is positive, that is going to significantly impact MDGL and other NASH players. If it is negative, MDGL will definitely benefit from it, but we do label it as red, as it is a big risk looming on the company. A slow launch. When companies go solo, that peak sales number definitely comes into question. But we because it is a first mover in a large untapped market where there's no other treatment, it's a yellow in terms of risk. The GLPs are also as yellow, as we believe that the fear is overblown about the one pill cures all. You can put it into with the Eli Lilly tirzepatide data, but it is overblown. In terms of the pipeline development, we label that as a red risk because other than Resmetirom, the company has nothing in its pipeline. In terms of balance sheet, we believe that the company is in good condition. They recently did a raise, I believe back in November or September. And in fact, the Baker brothers were involved in there as well. So it's bullish to see that the Baker brothers are in there in the offering, and they even bought more shares around the last half of the year. So we believe in all there are risks to MDGL. However, we are confident in MGL. One strategy that investors could execute over the next coming month would be to do a straddle on all the NASH players, as we believe they will be volatile heading into that data of Eli Lilly, and that catalyst will be a needle mover. However, we are not providing investment advice. We are simply describing the reasons for us holding MDGL and investing into this company and sharing our thoughts with the retail community. So yeah, if you have any comments, please leave them below. You can always reach out to us for more information, and we'll keep you updated on our future presentations of our holdings. MDGL this is our first presentation. It is one of our core holdings. So yeah, I hope everyone has a good time in the market and continues to succeed. Thank you.